Many of the laws regarding retirement funds were changed with effect from 1st of March 2016, and I suggest that you also watch the tax lecture video that explains the retirement fund law changes. Understanding how SARS taxes lump sums has always been a bit confusing for many tax practitioners, and this is not surprising. Firstly, there are two different sets of tax tables for taxing lump sums, and sometimes it's not always clear which set of tables should be used. Secondly, SARS's accumulative method of taxing lump sums makes the calculation more difficult. In addition, the lump sum amount shown on the tax certificate from the fund may not always be the amount to be taxed. Although there are different sets of tax tables for taxing different types of lump sums taken under different circumstances, a particular source code does not always mean that a particular set of tables must be used for a lump sum with a particular source code. You see, the circumstances surrounding the payment of a lump sum often dictate how a lump sum is taxed. Once you understand the circumstances, you will find it a lot easier to work out the tax due on the lump sum. Before a retirement fund or an employer pays out a lump sum, they have to obtain a directive from SARS. The information on the directive should help to reveal more about the circumstances surrounding the payout of the lump sum and how it was actually taxed. Members of these retirement funds may take 1/3 of their money in the fund at retirement as a lump sum, and they have to place the balance into an annuity to provide a monthly pension. From 1st of March 2021, SARS has managed to include Provident Fund payouts in this 1/3 rule. There are some terms and conditions that apply to Provident Fund lump sums, but in general, the same 1/3 rules now apply to pension, provident and RA funds. If the total amount of the member's money in one of these retirement funds at retirement is less than 247,500 Rand, then the fund member may take the entire amount as a lump sum. The 1/3 amount lump sum from one of these funds is taxable according to a set of special tax tables. This is the set of tables used to tax lump sums received at normal retirement, death or severance, or where the circumstances surrounding the awarding of the lump sum dictate that these tables should be used. The first 500,000 Rand is tax-free. This type of lump sum is normally given the code 3915. This is the set of tables used to tax what SARS calls pre-retirement withdrawals, such as when a taxpayer leaves one employment position for another and cashing in part or all of the money in their pension fund. The first 25,000 Rand is tax-free. This type of lump sum is normally given the code 3920.